Let me start with like biggest mistake is I think people get excited and buy the wrong location sometimes because they didn't do the research on it and make sure that it's a good location. And laundromats are like anything. You could buy a shitty real estate
Yeah.
deal.
And they'll overpay for an asset.
Yeah, totally. Exactly. Just to get into it. So I would say that's the biggest mistake. I would say the thing that sets us and other people that do well in this industry apart is always aiming just to operate in the top 10%.
All right, guys, welcome to another episode of Report. Today, we got a big meetup tonight here in downtown San Diego, not a Beers and Deals September meetup that I'm super excited for. And I'm very excited because we got a special guest today. I got someone who invests in the laundromat business and something that, quite frankly, I've been intrigued in. So I'm interested for this conversation. I got my man, Tom Donnelly. Tom, welcome to the show.
Hey, brother. Thanks for having me here. Appreciate it. Happy to be here.
Appreciate you coming on, dude. And fun fact, I think it was Jake Rosendahl that connected us. Shout out to Jake. Jake was on the podcast a few months back. And dude, you're local, man. You live up in Cardiff.
Yes, sir. Yeah, I've been out here for 9 years. Moved out here from Chicago in 2015. Never looked back.
Dude, I love that, man. This is one of my good friends, actually. He's from Chicago.
Oh, nice.
And I'm like, dude, I don't think I would go back either.
No. I mean, you go back for like a short time frame and then San Diego calls you back home.
Yeah, no, absolutely. San Diego is where it's at. It's probably one of my top 3 favorite cities in the country. I would say Miami, New York, and San Diego. But I don't know, man. I left for 6 years and I came back, and I feel like everyone that leaves here, they always come back. Sometimes you don't know what you have until it's taken away.
Dude, so true. And so 2021, I actually moved into an RV with an ex-girlfriend, and we were kind of scouting new places to look. I was like, maybe we'll end up in Colorado, Wyoming, who knows? And after like 6 months, 7 months on the road, I just felt the call back, like the ocean, San Diego, just miss the energy here. There's something about this place that I feel like really kind of pulls you in.
Yeah,
Doesn't let go.
Absolutely. And I think for me, it's kind of the hidden gem of California, because a lot of people talk about the Bay Area, LA, Orange County, but then you have San Diego, which is, from a cost perspective, actually the most affordable out of those 4 major markets. And then it's like you got all these cool little neighborhoods, these pocket neighborhoods, and every neighborhood is a different vibe. North Park, South Park, Little Italy, Point Loma, Del Mar, La Jolla, all these cool neighborhoods, and all a little bit different and unique. But everything's like 20-minute drive. I mean, you're even up in Cardiff, which is like North County, but I mean, what's your drive here? No traffic, 25 minutes?
Dude, 25 minutes.
Yeah.
Piece of cake.
Yeah. You go to LA, that's not the case.
It's a 2-hour drive.
Yeah, I know. So I love it down here, man. Weather's great. And I think because there's so many transplants, like people are just friendlier here than other markets in California. Like people move here, they don't know anyone. They're from cold weather cities, so they're already grateful. And then they're forced to like make new friends.
Totally. Yeah.
So I don't know.
Yeah.
If anyone's listening to this right now and you're looking for a new place to live, come to San Diego, come check it out, come to one of our meetups, say what's up, and I'm telling you, you won't be disappointed.
Dude, San Diego's it. And to your point about being grateful, after 9 years of being here, no joke, every morning I go outside, I'm like, paradise. Like every day, dude, seeing the palm trees and just being from like the Midwest and Chicago, I really appreciate the lifestyle out here.
100%, man. I actually own some real estate out in like Cincinnati. I've invested in Indianapolis, sold that deal a couple years ago, but I'm like going out to Cincy, Indianapolis. I was looking at stuff in Louisville, Kentucky, and I'm like, dude, I'm like, go out there for like 3-4 days. I'm like, I can never do it.
Yeah. No thanks.
Anyways, so you're in the laundromat business, dude. This has been an investment vehicle that I've always been very intrigued in. I've always thought it would be really cool as a real estate investor to own a small retail building with like 4 or 5 units, and then own one of the laundromats, like maybe start a laundromat business or buy an existing laundromat business within the building, and then rent out the other units to tenants. I always thought that would be really cool. I would love to do that sometime, maybe like in San Diego. But, right now I'm investing in boutique hotels. I do a little bit of multifamily, and, sometimes growing is about saying no, and you got to stay laser focused on what you're good at and what you know. And so I've yet to take the leap into that sort of thing, but I would be interested one day to just use my own personal money to go buy a small building and have a laundromat business. But how did you get into this game, man?
Yeah, dude, good question. So I had always kind of had the creative entrepreneur itch, and when I had a W-2 job, I was there for about 10 years, and about 5 years into it, I was like, "This will be the last job I ever have," and I just kinda made that promise to myself and started researching passive income vehicles, and everything that popped up was real estate, right? And I didn't have any experience with it, so kind of started going to masterminds and boot camps, and the more I learned about it and the more I learned about wealthy people and how wealth was generated, a lot of people were buying real estate. So joined a mastermind that was nationwide, had a couple hundred members in it. And one day somebody posted on that Facebook group, "Hey, I have an opportunity to buy a laundromat. I don't know anything about it, but are they good investments?" And I saw about 3 people comment on there like, "Own them, absolutely love them, reach out and I'll talk to you." So I actually pinged those guys that owned them, and I reached out to them, and all of them had great things to say. They're like, "You find the right location, you find one that's already had the market research done for it. You don't have to build it new. It's already cash flowing from day one. They're great little cash cow machines." So that was kind of my intro into laundromats. Once I talked to those guys, then I went down the rabbit hole, which was like YouTube. There was one podcast out there talking about laundromats, and just taking in as much as I could.
Yeah. At the time, you mentioned there was a little bit on YouTube, there was a podcast, but outside of that, was there much good education out there on it, or just kind of bits and pieces here and there?
It was bits and pieces, and
Yeah.
even the podcasts, like, they were interviewing, like, other owners or machine distributors, people that, distribute laundromat machines, all types of different people, so it wasn't really educational in the sense of, like, how am I gonna go out, buy this, run it, operate it, make it passive? And then YouTube, everything was kinda all over the place. Sure, there's a few good videos on there, but nothing that really, like, hit home and was like, "Oh, okay. I could put all these pieces together and go out and feel comfortable buying one."
Dude, it's funny you say it because that's exactly how it is in the boutique hotel space. There's, like, no books out there, not really much online education out there, like, it's just kinda like yeah, it's really weird. All these other asset classes like apartments and self-storage and retail and like, Airbnbs, there's so much education out there, but boutique hotels, there is, like, literally nothing out there.
Yeah.
Yeah.
Yeah, dude, I feel like if you look up Airbnb, you could find 20 different groups
Oh,
or
at
people
least
teaching.
hundreds, yeah,
Yeah,
everyone's doing it,
yeah.
it's crazy. But, yeah, boutique hotels, there's not much out there, and so it's interesting to say, like, laundromats, there's not either. So what year did you first get into this business?
2020.
2020, okay,
Yeah,
so relatively new,
yeah.
and then tell me a little bit about what you own today in the laundromat space.
Yeah, so I purchased 3 laundromats within the first 18 months of kinda getting into it. Then put a pause on acquisitions because 'cause we're like, "All right, we need to really understand the business, optimize the ones that we have, make sure that we're not making any mistakes or doing anything that's gonna bite us in the ass later on." So we did that. It's me and one other business partner, and he is up in Michigan, and we're actually working on building one out right now. So happy to get into the details of, the first one and how I went about
Yeah,
purchasing it and all
of
that.
course, I got a lot of questions, we'll definitely dig in.
Yeah.
Do you and your partner, do you guys own the real estate too?
We own the real estate on the first one, and then we're gonna own the real estate on the fourth one. Every one that we buy, so before I buy it, I'm working out a new lease with the landlord or making sure the current lease transfers. My first conversation with them is like, "Hey, I want to buy your building." A lot of them will say, "It's not for sale. Here's some absurd price." And I'll just say, "Hey, just, give me first right of refusal when you're actually serious, and then let's have a talk." So yeah, those haven't come back to, for sale yet, but who knows? Maybe one of them will.
Yeah, I mean, you never know, and I think, building out those relationships with those landlords, is definitely gonna bode well over time. It's not gonna hurt, that's for sure. And I was kinda thinking about this as you were responding to this question. If you own the real estate or at least own, like, maybe 1 out of every 2 or 3 that you open, you're gonna have depreciation, and you can use that depreciation to offset the taxes that you would pay with the laundromat income.
Totally. Yeah, you have the building depreciation, and then if you put in new machines, you have the machine depreciation as well. So as long as you plan on keeping that for a while, you don't want to sell it after a year or two and recapture that and get hit with taxes. But they've been great for tax depreciation.
Yeah. So where is the ideal location to go and buy a laundromat? Because I imagine you're not going to go into an A-class neighborhood in La Jolla where everyone has in-house washer and dryer. You're probably going to go into a lower demographic area. Is that right?
Yes and no. So they're kind of everyone can be kind of unique. So yeah, I would say the majority of them you're looking more for like BC class neighborhoods because that's going to be a lot of your walk-in customers or families coming in to wash like comforters or things that they can't fit in their home machines. Now, like where I live up in Solana, like there's one there, there's one in Encinitas. The reasons places like that work, more of an A-class neighborhood, is one, there's an RV park close by, so you have a lot of people coming from an RV park to use the one in Encinitas. And then the second thing is a lot of these A-class places will build out their pickup and delivery and wash, dry, fold services. So think about your busy family, you might have a couple kids, disposable income to spend. So, all right, people don't want to do their laundry. They may just pay the laundromat to come pick it up, have it all cleaned, and then deliver the next day. Or they're going to drop it off. Employees will do it, and then it's ready for pickup in 24 hours.
Is that what do you call that service?
So there's wash, dry, fold,
Okay.
or fluff and fold, which
Okay.
would be the customer drops it off and picks it up. And then pickup and delivery is the same thing. It's basically just somebody coming to pick it up and deliver it, so that way they don't have to drop it off.
Yeah. And what percentage, like just ballpark for a lot of these markets, what percentage is does that portion account for in terms of the overall demand of a customer?
So revenue wise on ours, it's like 30%. I would say if you're in an A class neighborhood, it could actually be the flip. It could be like 70%. So where you're having less people come in to actually use the machines and you're just having more people actually using the services.
Some of these people in A-class neighborhoods, they might have in-unit washer dryers that are nice, and they're just like, "Hey, I don't want to do any of this stuff. You guys just come pick it up and fold it for me, and I don't have to do anything."
Yeah.
Got it.
Yeah,
Interesting.
and if those laundromats are doing good marketing, dropping off flyers, social media marketing, it's a good way to capture a lot of that market share.
Yeah. I know in the hotel space, there's actually a good amount of boutique hotels that will use third party or offsite laundry services to do all the bedding and all that sort of stuff. I know one of the hotels that we bought here in San Diego in Little Italy, we have a 24 unit hotel here that we bought in May of last year, and the prior ownership was just kind of very cheap. They had a bunch of deferred maintenance. The laundry equipment had been inoperative for quite some time, and they didn't want to replace the machines. These machines are like, $30,000-$40,000 to replace. You know this
Yeah,
better than
they're
me.
expensive.
They're not cheap.
Yeah.
To replace a set of washer dryer like commercial grade, it's not cheap, and so they didn't want to replace them, and so they were just using third party services. When we bought the property, we replaced the equipment there. And so now we're doing it in house, but it's very common with a lot of these boutique hotel operators to use third party service for the linens.
Yeah, that's a really good point because I've seen laundromats like out in the Smokies. I have some Airbnbs as well. And I've just looked at some laundromats there, and a lot of their revenue is actually coming directly just from cleaners. That's the majority of their revenue. So they don't have a ton of people coming to walk in. They're just targeting the cleaners and having cleaners come in and do their services.
That's crazy.
Yeah.
That's interesting.
So yeah, they're just unique in that sense, right? Like, yeah, you could be in a C class neighborhood where okay, the demographic's just going to be people that need to come in and use your machines. You could be in a short-term rental market where you capture a big portion of the cleaners and basically have them come in to do sheets and laundry and whatnot. Or you could be in like a college town where you have students coming in, or you could be next to a huge RV park and that could be a majority of your income.
Mm. So what is the number one key in your estimation of buying a successful laundromat? Is it the location? Is it the market? What is it that drives or makes the difference between a successful laundromat and one that's mediocre?
Yeah, so it's a great question. The first thing is going to be location, because I mean, if you're in the wrong location, it doesn't matter, how great of a laundromat you have. I always tell people for their first laundromat, buy a used one or buy
Go-
one that's already existing
Existing,
because it's
okay.
cash flowing from day one. You already have a customer base. Somebody's already done the market research for you. Even if it was 10, 20 years before, you could redo that market research and make sure that population size and population density still looks good. And if it doesn't, okay, you move on to the next one. But if you start one, you got to give yourself some leeway to build up the customer base, build up the revenue, do the marketing, and then hope that you hit your projections. So, I said like we're building out our fourth one. I'm only doing that now because we're almost 5 years in and I feel comfortable doing it. When I started, I definitely wouldn't have gone that route just because I think it's a little too risky. So yeah, definitely location. Make sure the market research is done properly because you want to make sure there's a good density within your laundromat area. So, just a quick fact: like most people won't drive more than 3 miles to go to a laundromat. They prefer to drive like 1 mile. 3 miles kind of the furthest. So if you're in a market where there's call it 5 laundromats, you want to make sure they're spread out a little bit. And if they're not, let's say you have one on one block and 3 blocks away, you have another one. You just want to make sure you're operating in like the top 10%. So make sure all your machines are working, make sure you have good customer service, keep it clean, and just treat people well. I mean, yeah, that's kind of the formula.
Well, it's interesting you mentioned, hey, if there's, 4 laundromats within X amount of blocks, it's like, well, you see it's very common in big markets, big cities where you will see a gas station on each corner across from each other. It's very, very
Yeah.
common, right? You see a
Yep.
Shell and then you'll see like a 76 and then maybe a Mobile on this block.
Totally.
And I think if there's enough, customers in that area, there's a reason why there's 4 gas stations all within one block is because there's enough demand for it, right? And so, it's interesting. So it sounds like with the laundromat business, same thing. If there's enough customers in a particular market, it's not a reason to shy away if there's like 4 or 5 in a small area.
Absolutely. Yeah. Yeah. And you could look at the population density within that specific area for the location you're looking to buy. And if that density is good and there's one a few blocks away, it could be a good opportunity.
Okay. And so what does the debt look like? So if you're going in and buying just the business, and then I want to talk about if you're buying the real estate too, but if you're just buying just the business and you're gonna lease the place out from a landlord, and this is a pre-existing laundromat, what does the debt look like if you want to finance?
Yeah. So I've only done creative financing on these. You can do banks and go that route. Every conversation I have is, hey, let's do seller financing. Most laundromat owners
Are you
that
used to it?
are used to it,
Yeah.
and most of them will sell that way because
That's how they bought them.
yeah, that's how they bought them. Not every bank's gonna lend on them, especially if the machines are 15, 20 years old. They don't banks look at that and they say, "Hey, there's not a lot of value here in terms of assets." So they're used to it. So I'll give you an example. Like the first one I bought, it's in Atlanta. The guy was living out in Orange County. His business partnership had gone bad, so he bought out his business partner. He had this thing at a net neutral. So I was looking at his profit and loss statement, said it was making no money and just having a call with him, like, and talking to him on the phone, I'm like, "So you actually making money? Like, you don't have to put any of this in writing. It's not an email. Just tell me what's going on." He's like, "I'm just using it for tax purposes." It was making 187,000 gross. He had it basically zeroed out to where he wasn't making anything. So at that time, it was netting around like 20%. We talked to a machine distributor who said this thing should easily be able to gross like 300K, put some new machines in there, remodel the store. I mean, the place looked like it had been through a war. Like it was
That
just,
bad.
I couldn't even believe it was making 187K per year because like paint's, chipping off the walls, the ceiling tiles are all stained because the roof is leaking, a bunch of machines were down. So we really saw the opportunity there. So I was like, all right, well, usually when I make an offer to an owner, there's going to be a multiple of the net operating income. And I'm like, you have this thing at zero. I'm like, I'll give you 75K for it. And he's like, listen, I'm not going to sell it for less than I bought it for 10 years ago.
And
He's
what was
like,
that number that he bought it for?
he bought it for like
Okay.
115,000. We got him to go to 100,000. He just wanted to get rid of it. So he's like, give me 100K, it's yours. So we're like, all right, 100,000. We'll do 10% down. Um, and we'll do 5 years at a 5.5% interest rate. And he said, okay. So, I mean, 10,000 down on that one.
Yeah,
We
that's pretty
put,
good.
yeah, I mean, and that was our first one too. So we were super excited.
And with that one, what did you guys take the revenue to? You said he was doing about 165. What did you take it to?
So we're doing about 350 now.
Wow.
Yeah, we're doing about 300 almost just from machines, just from people coming in and using machines. And then around 40 to 50K for wash, dry, fold. We're kind of on the fence if we even keep wash, dry, fold around, moving forward because it hasn't grown
Has
really
has more
past
overhead
that.
too?
more overhead, more employees, and we're like, we could probably have 1 or 2, good part-time employees and have less overhead and make more profit.
Yeah. And so what was the key to taking the revenue up so much? You mentioned just from the machines you were doing over 300. So you essentially more than doubled. How did you what was the key to that?
So we remodeled the entire we bought the store, we remodeled the entire thing, and put in brand new machines. So brand new machines were about like 330K. We did Dexter machines.
You're there that much. I
For
believe
that
it.
much, there was
S
37 machines in
Okay.
total.
'Cause
Um,
I know when we replaced the machines here at this hotel, it was like one commercial washer, one commercial grade, dryer, and I don't remember exact numbers, but I wanna say it's between, like, 25 and 30K. Does that
yeah,
sound about right?
yeah,
Yeah.
yeah,
Okay.
that sounds right. And depending on the size of it,
Mhm.
because you have 20-pound machines, which could be 3 grand. You can have an 80-pound machine that's like 15K. Also, depending on what state you're in. So, this is in Georgia. It's going to be a little bit cheaper than out here. So we got that quote. Our machine distributors, like realistically, this thing should be around 300,000. We had known we were losing a ton of customers because there was a employee that's been there for like 15 years, and she's like, people just stop coming in here because this place,
It's just disgusting.
yeah, it's disgusting. So we got a full loan on the machines.
Really?
Yeah, most
From
machine
who?
distributors will give you 100% financing.
Really?
We had to put down, so we wrapped in our construction loan into that. So it was like 300 something for the machines. I want to say like another 50 for construction. And I think we came out of pocket like another 7,000. So all into this deal, we were $17,000. I've never put another cent into it.
The 50,000 of construction you alluded to, you got a loan for that too?
We wrapped that into the machine distributor was actually willing to give us a loan for that.
And give me an example, like what when you say 50K of construction, what exactly does that entail?
Yeah, so I mean construction, I mean just like we redid the floors, redid the walls, we put in new drop ceiling tiles.
And the machine distributor is okay with that because that's gonna give you a better chance for this business plan to go smoothly and for you guys to repay the loan. Is that why?
Exactly.
Okay.
Yeah.
Okay.
Yeah, and
That makes sense.
I've talked to machine distributors like in Michigan, they won't give us the construction loan, but in Georgia, for some reason they would. Same machines, different distributors, so it kinda depends on who you're talking to and where you're at. But yeah, I found that interesting because at that time we had no experience. Now we're like 5 years in, and they won't give us the loan on the other one for the rehab. But yeah, so we built that in. I think we came out of pocket like an extra 7,000. We closed off the store in sections, so that way we didn't have to shut down the whole thing and lose all the revenue while it was being remodeled. So we were doing, call it like 8 to 10 machines at a time. It got done within a couple months. We never had to shut the store down. And call it after a year and a half of redoing that, I mean, just word of mouth marketing really got out in terms of like old customers coming back, people that were already there telling other people, and our foot traffic just really picked up. So we actually hired a marketing agency. We were spending like 500 to 1,000 a month for call it a year. We weren't really getting much of a return from them. We were doing like social media marketing. We built a nice website. And for that location, which is like a half hour outside Atlanta, it just didn't work. So we quit paying for marketing and everything is just word of mouth and
Word of
organic.
mouth. And you stopped doing social media posting with that one?
Yeah.
Interesting. Okay. Just all word of mouth.
Yeah, just all
Okay.
word of mouth.
Now, what about like driving like Google reviews, Yelp reviews, all that sort of stuff? That's got to be important too, no?
Yeah.
Okay.
So Google reviews are extremely important.
Yeah.
What was the other thing I was gonna say? Yeah, so Google reviews extremely important. Yelp, we don't have a lot of customers that go on there. It's usually Google. The other thing I wanted to mention is when you put in new machines, because Matt's in Michigan, I'm here. You could manage these things remotely now. So I get a report every day that breaks down every cent that was put in those machines. It's like, here's your daily revenue, here's your year-to-date revenue, here's your monthly revenue. Here's how much revenue from coin, people putting in quarters. And then we also do app pay, which is like 30% of our revenue. And that's for people that just want to pay via app. A lot of old school people very hesitant to download the app
They just
and
want to get quarters.
they just want quarters.
Damn. That's crazy.
Yeah.
And can you just show up and swipe a credit card if you wanted to?
We don't have credit card. We did app pay instead.
Yeah, pay instead.
Yeah,
So download the app. So it's like a scan code they can like scan, then download the app, and
exactly.
then
You start the machine.
got it. Okay, interesting.
Yeah.
And so you said you're doing about 300 something per year now
Yeah,
with that particular location, and you don't own that real estate, or you do?
we do own that
You
real
don't.
estate. Yeah.
So when you bought it,
Mhm.
the business portion was from that gentleman. Did the landlord who sold you the real estate is a different owner that sold you the business, or same guy?
Different owner.
Different owner.
Yeah,
Got it. So how did
yeah.
you guys do that transaction at the same time, or was the real estate after?
Real estate was right after.
Right
S
after.
so
How did that come to fruition?
yeah, so basically we got the landlord's number from the guy who owned the business. We called him. His name was Harold. I don't know if I remember that, but
Mm.
he's 82
Shout
years
out to
old.
Harold. Let's go, Harold.
Yeah, Harold. Thanks, Harold.
Yeah.
82 years old. And I just talked to him like, "Hey, man, we're buying this laundromat. We, either want to A, work out a really good lease with you, or if you're interested in selling the building." And he's like, "Make me an offer." So we're, okay, let me go back to my business partner. Let us do a little research and we'll come up with a price. We ended up buying the building for 330K. We used the bank for that. So I think we put down like 10%. I want to say like maybe 35,000, something around there.
How many units are in this building?
There's 4 units in the building.
Okay.
So the great thing about this that I love is you never have to worry about a lease, which is obvious, right? So the landlord can never raise your rent. We get the depreciation from the building, like we talked about, and then we have the other 3 units that are constantly rented out and making us income.
And all 4 units were occupied?
All 4 units were occupied.
Okay.
We've gone through a couple turnovers since then,
Uh-huh.
but they're always occupied. Somebody will leave, it'll be vacant for, call it 2 months, and then we'll get it rented again.
What kind of businesses are renting out the other units?
Yeah, so I mean, they're all over the place. We have a hairstylist who's right next to us, who's been there for, call it a decade. We now have a CBD kind of like holistic shop next to us. That was an accounting firm when we bought it. And then the last one was a barbecue. The guy was like making barbecue for his food truck. And I forgot what kind of business we have in there.
Okay.
Um,
Different tenants now.
yeah.
Interesting. Okay. So that's pretty affordable for a building like that. And this is a submarket 30 minutes outside of Atlanta.
Yeah.
Got it.
Yeah.
Okay. Very cool. Very cool.
Yeah. So, that was our first one. So it gave us a lot of excitement and motivation to just keep on going. Like, all right, let's go do the next one.
So you mentioned at the top of the show, you're going to get depreciation. So, obviously you own the building there. So you're getting depreciation. Let's call it, when we get cost segs on properties, typically about 30% of the purchase price or the cost basis we're offsetting in year one. So just say 30% of whatever you bought the building for. And then you mentioned at the top of the show, you're getting depreciation for the equipment that you put in. So that's what
Yeah.
you said, another $350,000. Even though you put zero down, you're getting
Yeah.
that full
Get the
350
full depreciation on it.
on year one, and you can just roll it over,
You
whatever you
just
don't
roll
use.
over.
Fuck.
Yeah. So the past couple of years have been good
That's
tax
pretty cool.
wise. Yeah,
Wow.
dude.
Okay.
I mean, and that's another thing that made it really appealing to put in those new machines, because you're like, fuck, 350K worth of machines. Like, are we going to be able to pay the loan back and all that? But, you do the right research in terms of like demographics and all that. And then you match that up with what a machine distributor gives you. If you're in that same range, I mean, you shouldn't have an issue hitting those numbers. So yeah, the depreciation was just kind of like a bonus on top of it.
Yeah. I love that, man. And so then you got a few more. So tell me about those other ones.
Yeah, so I found all of these just by sending letter campaigns. And the second one, the guy also owned it in a strip mall. He didn't own the strip mall. There was like 5 or 6 units. Landlord wouldn't sell us that building.
Same market.
Same market, but
And-
about 40 minutes north.
And why this market?
So we had 3 business partners when we started. We ended up buying the local guy out just because we ran into some issues and he wanted to go do something else. I really loved the submarkets of Atlanta and the price that you could buy these things for. Like, I want to get one here in San Diego. I haven't found one that has been worth it yet, especially price wise, because I've talked to a lot of owners, and for what they want, I'm like, oh, I could buy the same business out in the Midwest. It's going to make me the same amount of money. The rent's a third of the price. Utilities are half the price. So I'll just keep buying there until I find one that comes along here.
If you love real estate investing, passive income, and tax benefits, but don't have the time, my company, Summers Capital, is buying boutique hotels right now. We source the deals, we renovate the properties, and we even handle all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, visit summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show. Now out here, obviously, if you buy the real estate with the lower cap rate environment, over time, you probably make more money if you're owning the
Yeah,
real estate, right?
for sure.
But if you're just strictly buying the actual business, you're saying you will make more cash flow or a similar cash flow out there, but for a fraction of the price.
Absolutely.
Interesting.
Yeah.
Okay. Very interesting. So, yeah, I'd be curious on like what a deal looks like here in like a good, a good conducive laundromat neighborhood in San Diego.
Yeah, so I've talked to owners all over the place, La Mesa, El Cajon, Pacific Beach, University Heights. I talked to one guy, he owned one in PB and University Heights. Locations were freaking fantastic. Like I loved them, but his numbers just didn't make sense. Like his rent was like 6K a month. He didn't know how much money he was making on these things apparently. So I was like, let's sign a non-disclosure agreement. You send me over everything. I'll take a look at your profit and loss statement. Like, I'm not gonna bullshit you. And if there's an offer to be made here, I'm like, I'll make you one. And from what it showed, he was losing money on both of them. Yeah. So it's like, all right, is there a way to make these work? So at first I was looking at the one in Pacific Beach, just a really good location where like Balboa and Grand kind of meet, tons of traffic. And I'm like, "Hey, is this rent gonna go up at all? Because your lease already ended." And he's like, "I'm not sure." The landlord mentioned, like, if somebody new comes in, they might raise it. And then I'm like, "Okay, why don't you have, like, any vending machines or anything like that in there?" Well, it's backed up to a 7-Eleven, and there was some kind of exclusivity with the landlord where he wasn't allowed to put any additional, like, vending or anything like that in there. So I didn't really see an opportunity to grow the income that much. So that one I passed on. The one in University Heights, somewhat similar in the sense where there wasn't a ton of room for growth. At least I didn't see it. And yeah, I haven't really found one out here that was like a home run.
The laundromats here in San Diego, ballpark, what do they sell for? Obviously, there's a
Um,
range depending on neighborhood, but
yeah,
ballpark, what did you see?
I would say I've seen between like
3
3 to 800,000.
to 800.
Yeah.
Okay.
The one good one that I was interested in, which was out in La Mesa, was 700K. And they said they were getting cash offers for it. So,
And what does something like that do gross annually?
so that one was grossing, I believe, somewhere around like 400,000 and like
That's it.
netting, yeah, I want
Wow.
to say 30% of it.
Okay. And is there a play to take that 400 to like 800, 900?
That one, I saw an opportunity to
You
grow
did.
it for
What was that
sure.
opportunity you saw?
So a lot of their revenue was coming from, there's a big RV park over there. And a ton of their revenue was coming from that. It didn't seem like they were doing much marketing outside of that. It's an extremely dense area. And I feel like if they put some effort into that and also growing out some of their commercial business, so like capturing, the short-term rental market cleaners, going to restaurants or hotels, getting like the contracts for sheets and all that kind of stuff. I thought that could have grew it out pretty significantly.
Interesting.
Yeah.
What are like some other value add strategies that you guys try to identify when you're looking to buy a laundromat?
Yeah. Yeah, so wash, dry, fold's always the first thing. If that's not there, should we add it? If it's there, can we grow it? Offsite dry cleaning, so just partnering with a third-party dry cleaner. So that way you become more of a one-stop shop. People could drop off and you could do dry cleaning for them. And then some of the smaller things, right? Like vending, ATM. In Atlanta, it's legal to put in digital slot machines, so we just put those in a month ago. We haven't seen a huge bump in revenue yet. The people that install them says it takes about like 3 to 6 months, so we're gonna give it a year.
And you get like some sort of profit sharing with the operator of this slot machine.
We do, yeah. Yeah, we give them a cut. I don't remember exactly what that was, and then we keep the rest. So basically, they install the machines for free. They dropped off, I think this location has 3 of them, and then while people are waiting for their laundry, they could play slots, and if they win, it just pays them out a voucher. So there's no actual like money coming out. We're not, we haven't had any issues with like people coming in trying to rob the store or anything.
Yeah. No, that's a good thing. I was just thinking about it. I have an apartment building in Cincinnati. It's 11 units multifamily. And with that particular deal, I have a third party laundry vendor who provides the equipment. And I think he's got 2 washers, 2 dryers in the property. And it's coin operated. Maybe they take credit cards now, but at the time it was coin operated. Well, this is 2019 when I bought it. And they just go and collect the coins like once a month. No, I think it's once a quarter. Once a quarter, and then they deposit the money. They send it over to my property manager, and yeah, once a quarter, and that's it. And I think they take care of all the maintenance. The machines were included. Well, it's their machines, they own them, but all the maintenance is included. And it was a 50-50 split they did, but I like negotiated. I think I do 60-40.
Oh, nice.
So I keep 60%. They take 40.
That's awesome.
Yeah, so it's
Yeah,
not
that's
bad.
great, man.
And it's not a ton of money, but it's like every quarter, it's like I think it's like $400 or $500 every
Yeah.
quarter. Yeah,
Extra cash flow. Why not?
yeah, yeah.
That's kind of like what we see with the vending machines too.
Mhm.
It'll be like a couple $100 every month, and over time, it adds value to one your profit, and then the business, and then the other thing that we do is we raise our prices every 6 months. Most of the time, people don't even notice it. We'll raise it a quarter. And it doesn't sound like a lot, but you figure if your machines are getting used 3 times a day, so that's always kind of what we're going for when we buy a laundromat. They call it 3 turns a day. You figure that adds, call it an extra 12, 15K to your bottom line for that year. And you do that over the course of multiple years. Then when you go to sell that thing, you could sell it for much higher.
Say that again. So you do what with the turns?
Okay, so the amount of times a machine is used per day
Okay,
in the laundromat industry is called turns per day.
turns per day. Okay,
And ideally, your machines are getting used 3 times a day. So they're 3 turns per day. Usually it's between two to 3. That first one we bought, we're at like 2.5 turns per day. And the more turns per day you could get, the higher your revenue is going to be.
okay.
So
Now, if you get over X amount of turns per day, does that mean you need to buy more equipment, more like laundry, more washers, more dryers?
you might not be able to fit it in there. So if you put in new machines, this is what I really like about machine distributors too, is they'll design the store very optimally. So they'll come in. Sometimes they're moving around some of the old stuff and they're going to give you a new layout design and say, okay, like we're going to put these machines here because you could fit an extra 4 or 5 total new machines than what you currently have. But yeah, I mean, we've optimized our space so we can't even put in new machines.
Got it. Okay,
Yeah.
interesting. Now, what would be like? What's the highest you've ever seen turns per day?
I haven't seen past like 4.5.
Okay,
Yeah.
interesting. And then what does the debt look like if you were to buy the real estate? Like what does that look like if let's just say you were going to simultaneously buy the laundromat business and the real estate? Is there a way to wrap that into one loan if you were not using any seller financing, no creative financing component?
There is. You just have to find a bank or a lender that'll do it. When we got started, we're using a local bank there in the South. They wouldn't do it because it was our first one. Now they said we have a good kind of history with them now, obviously of payments. So they said if we do find one again, they'll take a look at it. It really comes down to, all right, how much is the business generating? How much value is in those assets? And then how much are they selling the building for? So, I mean, I'm an optimist when it comes to that. Like, there's always a way to do it. So I think there's always a bank that'll do it if you have a good deal. And, if you don't find a bank that'll do it, you find a private investor. We bought our second one with a private investor. They gave us the full loan for it, minus 10%, is our down payment because they wanted skin in the game. But yeah, we've kind of stayed away from banks just to make the deal happen
Easier.
quickly.
Yeah.
Yeah, easier. And I think once rates come down, we'll probably refi that whole business and property and take some money out of it to go buy another one.
Yeah, we do the same thing with the boutique hotel space. I'm like always looking for seller financing opportunities, first and foremost, especially with the rate environment that we've been in. We get to come in with often, lower money down, which juices the returns, and negotiate our own rate, often no prepayment penalty, and gives a little bit of flexibility. And then also, like something that a lot of people don't allude to, is these sellers, these mom and pop sellers that make good candidates for seller financing, because what makes a good candidate for seller financing would be a seller that is not going to roll their proceeds into another deal. They're retiring. They prefer the cash flow ongoing in retirement, but also they want to lower their tax burden. So they make a good candidate for seller financing. But one cool advantage about the seller financing, like we have a deal up in, it's a 10-unit boutique hotel up in Northern California that's beachfront. This deal, the seller financed 70% of it, husband and wife, they're older. This is their only piece of real estate they owned. They own this hotel for 22 years. And they're like living off of this cash flow that we pay them. We pay them like $5,100 a month in debt service, and they're living off of that. And so I was talking to them not too long ago, and they're like, we're living off of this money. They're like, we don't want our money back. We just want the cash flow. So when I refi them out, they're likely just going to give me that money back and roll that right into more investment opportunities with my company because they prefer the cash flow ongoing. And so I think one of the added benefits as a real estate investor, you get the seller financing component. It's like when you go to pay them back, they're often going to give you that money right back and now become one of your investors, which is kind of cool, right?
Dude, that's incredible. I love that. I just love how you never know where it's going to go, right? Like you went after them to like buy their hotel and work out some kind of creative deal with them. And now they're like, hey, we're actually going to take this money and reinvest it with you. So
Yeah, it's something with the seller financing that not a lot of people talk about, but that is an added benefit. It's like you build the trust over month in, month out. You pay their debt service on time, and then they see what you did with their business. They see what you did with their property, and you turn it into something that they were never able to do over 22 years. And so now that builds that level of trust, and they're like, okay, like yeah, you are a good custodian of my money. We want to roll it with you. So I think it kills two birds with one stone, especially being in a high rate environment to be able to like negotiate all that stuff is kind of cool.
yeah.
Yeah, it is very cool. Where do you see the opportunity right now with as we move forward, the landscape? Obviously, the laundromat business has been around forever, but it sounds like it's somewhat evergreen, meaning there's never going to be a replacement for the basic need of like just having clean fucking threads, clothing, like bedding, like everyone needs that, right?
Absolutely.
So I like that it's evergreen, but like, where do you see the future of like the laundromat business going as you think over the next 10 years or so?
Yeah. So it's interesting because there's a lot of people coming into it, kind of like us from the real estate world, or like even more from like a tech standpoint. So there's kind of this revolution happening where it's going from a lot of old mom and pop owners that didn't want to share their secrets, didn't want to tell anybody what they're
Yeah.
doing because it's scarcity
Scarcity
mindset.
mindset.
Totally.
Yeah.
Yeah, dude. And now you have like there's tech companies coming in building POS systems that basically are kind of like a one-stop shop. They're like, hey, you want to do pickup and delivery? You don't need to hire a driver. We're going to connect you with DoorDash. DoorDash will do all of your pickup and delivery for you. They'll take a cut of it. We'll handle all your wash, dry, fold. You're doing offsite dry cleaning. And before that, it was just kind of like you're piecing a lot of the stuff together. So there's a lot more of that and people just coming in with fresh ideas. I personally think, one, the coin machines will always be a thing.
Why is that?
Well, you figure like based on the location.
I don't know the last time I ever had coins in my wallet. Ever.
Yeah.
Actually, recently, real quick,
Yeah.
I was filling up water. So with a boat, you have a freshwater tank. And so, you go out on the boat, stay in Catalina, whatever, like you take showers, wash your hands, all that stuff. It consumes over time. So this boat that I have, it holds 100-gallon fresh water. And so I was out in Catalina and it ran low. One of the girls I brought out there, she's taking like 30-minute showers. I'm like, yo, isn't that how we do it on the boat? You know?
You're like, come on, we're not at home.
Yeah, that's not how we do it on the boat. But anyways, so I had to go refill, and there was like a freshwater hookup out there in Avalon. There's a dock you pull up to, and it was coin only. And so I'm like, I don't have any coins. And so luckily another boat pulled up next to me. He's like, dude, I got some extra coins. And so boom, ended up being a quarter for 25 gallons. And he had exactly 4 extra quarters, which is 100 gallons, and that's how big my tank is.
That's
so anyways,
awesome.
that's the last time that's the only time I ever had the need to buy in coins in a long time. But anyway, so you're saying
you need coins.
You need coins, yeah.
Need
that's
coins.
the takeaway.
It can't all be Bitcoin talk these days.
I know.
All right, so yeah, back to your question. Like, based on where it's placed, there's that demographic of people that want to come in and just use coins or use the app. All right. So, okay, you don't have to use coins, right? What I meant by my comment is there's always going to be people coming in to use the machine. So whether they're paying with coins, paying through app or credit card, That's always gonna be a huge chunk of the laundromat business, and even people I know families my business partner that I own this with is a great example. So, they have beautiful house, they have their own washer and dryer. He's got 3 kids, they freaking puke and, like, shit the bed all the time, and he's like, "I need to take my comforters and everything to a laundromat and throw them in a 60 or 80-pound machine." So, you have that, and then you just have the customers that are coming in just to use it to do their laundry and whatnot because a lot of their homes don't have the hookup. So, a good example is, like, take Pacific Beach, pretty affluent neighborhood. A lot of those buildings and homes are so old that they don't
They
have
don't
a
have
hook
hookups.
they don't have hookups in
Yeah.
them. So, places like that, laundromats work, as
Mm.
long as you have a good one and you're operating it correctly. So, yeah, I the machines themselves will always be a big thing. I think wash, dry, fold, pick 'em and delivery are just gonna keep gaining more and more traction, especially as, families are busy or people just don't wanna spend time doing laundry or whatnot. I think there's people coming in and able to do it at a reasonable price where people start weighing out, like, the time that they're spending doing laundry versus, like, what they could pay for it. And if you have a good location where you could pick up 10, 20 different customers at the same time, now it makes it more profitable and more efficient.
Yeah, interesting. I always thought that, like, if I had someone, because I don't doing laundry is a pain in the ass, but I always thought if I had someone do the laundry, I would almost, like, want someone to come into the house, do it at my place, fold it, and then put it away in my stuff. But this is some of the hotels, though, like, some of these, like, higher end hotels you stay at, they always have a bag in the closet, you can open it, and you just call them, they'll come pick it up, and that's basically the same kind of service?
Yeah,
Okay.
yeah.
So you could do it for
It
hotels too,
you do
potentially?
we could.
Yeah.
And so we're thinking about doing this for the location we're building out because I've seen this at others, is like putting lockers outside for call it hotel cleaners or Airbnb cleaners that have some kind of membership with us and giving them like a digital key code where they could put their laundry in that. We'll have the employees basically wash it for them, have it done within 24 hours, put it back in the locker, and then they could come pick it up whenever they want. So that way they're not, they don't have to abide by our hours or Dropbox or anything. They could just come anytime they're ready, drop it off, and then pick it up once it's done.
Yeah, I love that. I
Yeah.
love that. What do you think is the one thing that separates someone who's successful investing in laundromats and someone that maybe doesn't quite get in there and move the needle? If there's one skill set, what would that one skill set be?
I would say, okay, so let me start with like biggest mistake is I think people get excited and buy the wrong location sometimes because they didn't do the research on it and make sure that it's a good location. And laundromats are like anything. You could buy a shitty real estate
Yeah,
deal.
and they'll overpay for an asset.
Yeah, totally. Exactly. Just to get into it. So I would say that's the biggest mistake. I would say the thing that sets us and other people that do well in this industry apart is always aiming just to operate in the top 10%. That's how we go in with all of them. It's like, okay, we need working machines. There's so many damn laundromats you walk into that are older and there's 5, 10 machines down. And it doesn't matter if you have 100 machines, if you have 10 down, that's what customer sees. Anytime we get a bad review, it's because we have like 1 or 2 machines down and we're waiting for a machine distributor to come fix it. Keep everything operating well, keep it clean. We also do happy hours, not in terms of drinks, but in terms of like washes and dries. So during our slow time is let's say Tuesday from noon to 4 is extremely slow. So we'll say, hey, come in during that time. We'll give you a half off wash, and a free dry. So stuff like that, just to be
Yeah,
creative.
I like that.
Yeah, not just buying it and be like, okay, it's already optimal. We're not going to do anything with it, but always kind of thinking creatively and then seeing what other people are doing to do the same thing.
Do paid ads work well in this space? Like running paid ads on Facebook and stuff like that?
They haven't for us, but apparently they do for
For
other
the stores?
operators. Yeah.
So maybe some of it's dependent on the market
Yeah.
and maybe the demographic in that market.
Yep.
Interesting. Yeah, it's definitely an interesting asset class. I've always been like kind of intrigued by it. And it's a little bit mom and pop, right? Are there a lot of these operators still pretty mom and pop? Because I know in the boutique hotel space that is the case.
Everybody I talk to, I would say, call it I've talked to close to 100 operators. I would say 2 were investors that came in during COVID and bought, and now they're looking to sell. Everybody else, mom and pop, that has owned 10, 20, 30 years, handed down from their parents, like, yeah, that's pretty much the majority of
Where's the
people.
best place to find these deals? Is it to go online, like Biz Buy Sell, and find these brokers, or are some of these the best deals off market?
All off market, to
You
be
mentioned you
honest.
mentioned you were writing letters.
Yeah.
What does your
S
letter say?
yeah, so, first of all, my experience with business brokers in this space has been terrible. They just delay everything. They don't get you the information that you need. They don't really want you to work out a great creative finance deal because they want you to buy it outright so they could get their commission. So I just started sending out letters, and if I don't, I mean, that's how we bought all 3 of the ones that we have in Atlanta. If there's ever one I want to talk to that's not responding, I'll just call them, or, keep calling, keep sending letters till I get a response. My letters, I just make them personable. Hey, I'm a local investor here looking to buy a laundromat. Yours looks like it fits my criteria. If you've ever thought about it, you want to have a conversation, here's my personal phone number, here's my personal email. Feel free to reach out to me. And if now is not a good time, just keep this in your desk somewhere and reach out when you're ready. And I'm comfortable giving my personal information because you figure my list of laundromats I'm targeting is 60, 70 big, depending on where I'm at. It's not like I'm sending a real estate outreach campaign
Tens of
where there's
thousands.
thousands
Yeah,
and you're going to get people harassing you
yeah.
or like cussing you out. So yeah, I get the people that want to have the conversation. They're interested to hear why I want to buy their laundromat or how I got started in the industry. And I just had some really great conversations, even with people that I haven't bought from. Just really cool mom and pop owners that like kind of got into the industry for their own similar reasons in their own way, or was passed down from their parents, and it's been in the family for like 40 years. So
I'm curious, due diligence wise, because when we go buy real estate, whether like we're buying an apartment building, we're buying a boutique hotel, we can go on CoStar and we can look at all the rent comps and see exactly what all these other apartment buildings in the area are getting from a rent, like a price per square foot basis in terms of rents. And then the boutique hotel stays same thing. CoStar has the ADRs, the occupancy. We can also go visit these hotels, see what kind of information we can get from the front desk. And so even if we bought an underperforming hotel, like actually the more underperforming the hotel, the less I give a fuck about the P&Ls, because we're going to be buying off of our own pro forma, right? We're going to be operating on our own set of assumptions. And so with you guys though, buying a laundromat, I assume getting that data from the comp set's got to be much more challenging. How do you guys get data from the comps and say, okay, like what kind of revenue are these other stores doing?
yeah. So there's different formulas. So I mean, the P&Ls sometimes you got to take with a grain of salt because some people will inflate those. There's a formula that we use. We'll get the utility bills, we'll get the electric and water, and then we'll back that up into, I forgot exactly what it is, but we back that up into some formula, and it's usually within the range of what it should be for the P&L numbers that they gave us. The other thing we'll do is like we'll see if anything's listed for sale in the area on BizBuySell or BizQuest, and we'll just see what their numbers look like. But the thing that you have to match up is how many machines do they have, and how many machines does the store you're looking at have. So I mean, if they're similar, great, and if they're not, let's say ours is half and theirs is double machine wise, then we could just take that revenue and either cut it in half and match it to
Mm,
our machine count, or
yeah.
yeah, so there's ways to do it.
And the reason I asked this is because you said it just now. You said a lot of these owners might inflate their P&L, so it's hard to trust it. So, like when we go buy real estate, we always try to get as part of the due diligence items required is like in the PSA is like we want tax returns, but some sellers don't want to provide tax returns. I get it. And so we got typically we'll ask for 24 months of trailing bank statements, and we'll try to like match the income. But outside of like that, I mean, are you guys? I mean, you can still fudge that stuff as a seller.
You'd still fudge it. Coin collecting's a big one too. So we'll go coin collect with them. We were under contract, actually the first one we were going to buy. This happened twice where the owner, accidentally coin collected the night before we came because that was his night. my gut was telling me like something shady's going on here, so we dropped out of that one. But we'll go coin collect if they're old machines. Now we haven't bought one with new machines, but like if somebody goes to buy ours, if we go to sell it, everything's tracked. So basically, our numbers, especially if somebody that knows what they're doing is coming in, they'll be say, "Hey, those machines are only 2 years old." We know, there's Dexter Live, which is basically going to show you all the revenue that's been tracked, minus the wash, dry, fold, and additional revenue. But that'll tell you exactly how much machines have made you for the year. So yeah, I mean, there's definitely a lot of gut intuition, coin collecting, a lot of question asking, and then kind of backing into that formula and just making sure that everything seems like it aligns. And if it doesn't, just being comfortable asking multiple questions, which I'm sure you guys do too. It's like if somebody gets annoyed with me for asking questions, it's a red flag to me because they want to sell their business. I want to buy it. They should be happy I'm asking these questions. And if they're not, then it's like, okay, what are you hiding?
Dude, I've never understood that, and it's very prevalent in the commercial real estate space, especially buying from mom and pop sellers. They just give very limiting information and financials to these brokers, and I'm like, man, like, I don't know, like, I've sold a couple of commercial assets now, and like, I always provide the broker all the information, all the P&Ls, all the stuff, and like go above and beyond to be like helpful. And from a buyer's perspective, like I always love working with sellers that like provide everything nice and clean. All the financials are nice and clean. Like it just improves the entire experience. You're going to be able to pay top dollar, but like when the sellers don't want to provide certain things and there's holes in the financials, well then I got to assume the worst. And so now what I'm willing to pay is a lot less than what I would have paid if that was all put together. So I've never understood it,
Yeah.
but that's how some of these mom and pop sellers are. I mean, it's freaking weird,
I
dude.
know, I'm
You
with you,
know?
man. I don't know if it's like that old school mentality where it's like, don't give them too much. We don't actually want them to know, but I'm with you. It's like if we get all the information we know up front, most of the time, if it all looks good, we're making a higher offer, and then it makes the transaction process way smoother and way shorter.
Absolutely. Well, Tom, I appreciate you coming on, talking shop on laundromat investing. Where can the folks get in touch with you? And you got a freaking education platform where you teach other folks how to buy laundromats. Talk about that.
Yeah, I do. So once I started buying them, I just had a lot of people coming to me like, "Hey, how'd you get into this? Can you teach me or whatnot?" So started a course on it. If somebody doesn't want to buy the course, I have a 20-minute free training that you could find at theassertiveinvestor.com. And if you just want to find me, like posting some tidbits here and there, Mr. Tom Donnelly on Instagram and YouTube. I started a YouTube channel this year too, so
Let's go.
just providing as much value as I can.
Let's go. Let's
Yeah.
go. There it is. He's Tom Donnelly, about to come hang at the Beers and Deals meetup here in just a few minutes. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you in the next one. Peace.